Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, March 13, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, the market didn't do much today. After yesterday's rather larger or ish up day, she had what we call a pause in the action. The SPY was down 80 cents. The SPX was down 9 or 10 points. That's not a big deal. It's a slight retracement / pullback from yesterday's move. It's garden variety. Markets go up, then they pull back. They go up again, then they pull back. They go up again, and then they pull back. This is the way these grinding, uptrending markets work. In fact, and we'll get to this later, they did the morning trade in the afternoon. And yes, we did have participation from the live room and inside the numbers as I got the emails late in the day. Nice trade. We'll get to that later. When you look at the weekly chart, we're going to watch last week's high. Closing this week above last week's high will negate the sign and or signal of a trend change from last week, but it won't do, what it won't do is negate the on-time type of situation. Remember, we're coming into a series of tinfoil hat type of timing situations. Markets have a tendency to trade up into or down into those events and then put in some kind of a turning situation. Tinfoil hat event, 19th, 20th of this month. That's next week. And then less than a week later, we have another one. It's a double barrel tinfoil hat situation. And then there's another going out to April. We don't have to worry about that right now. What we do need to worry about is that the trend is your friend until the very end when it no longer exists. That's at the point when she throws all your crap out the window. She's no longer your friend. By the way, I think we also have the FOMC or Kabuki Theater next week as well, just to add insult to injury. Is there anything else material that either happened today or we need to know about with the daily chart of the SPY? And the answer is, nah, not really. She didn't do much. Relatively quiet all day long. Light volume, low participation, not a trader's tape until that shimmy in the afternoon. What's a shimmy? It's a technical term. What about the live room? What about who's making money in the live room? Well, let's take a look at a couple of things that popped up after the opening bell. And we'll circle back to inside the numbers, but after the opening bell, what kind of trades did we get out of the gate today from a live room participation standpoint? Trade alongside David. We traded Tesla, 171.85. That was a number the live room members knew about, not even from this morning, but also from yesterday. They gave a nice bounce, gave you the deal. The high following the meeting of 171.95 or 85 was exactly 173.49. It's a nice base hit. Base hits put you in the Hall of Fame. When they come back down, trade is over. It's off the table. There's another number below, which they did not hit today. We'll have it on the radar screen for tomorrow, live room people. But of course, Tesla was just the warm-up to what? How about NVIDIA? 886.25 was the number. They hit it, rocketed off, tested it again, rocketed off, tested it again, rocketed off. We had many, many participants in the live room, NVIDIA today. If they're going to move them and we can find a number, we'll trade them. We've got something for everybody. Keep in mind, the spiders were rather quiet this morning. Speaking of which, right of the vertical is today's activity, and you can see here, this is the morning, and look what they did. They didn't do anything until later in the day. This is a narrow range. That's what the spiders did this morning. But wait, there's more. We'll go over the early thoughts. What I urge you to do is pause the video, read the notes, and go back to double check the work on the charts. I'm going to highlight a few important things and you'll get the point. So if they were going to goose the tape, we had some numbers above. We didn't need those today. So we'll go the other way, the flip side. What about the flip side situation is she tugs on the rug a little bit and sends price in an early shakeout operation or maybe a late shakeout operation, which would open the door for a visit down at 515.10 or lower. Well, what's the or lower? Hold on, we'll get there. Let's scroll up, see what else we have. Keep it simple before the opening bell. 515.10, give or take, down to a spike of 515 is support and a bounce back in the other direction place. So by 9:52, there's still no change. I'm saying here, expanding it, this is what we're looking at. 515.10 down to 514.50 is a zone for a bounce back in the other direction. 515.10 down to 514.50. Sticky note. Right of the vertical, today's activity, 5-minute chart, 515.10, 514.50, low of day, 514, 48, 49, something like that. That was, in fact, low of day. They gave us the morning trade in the afternoon. That was the trade, regardless of when it happened. 515.10, down about 60 cents was the zone. Rip it back in the other direction. Nice trade. How do you do that is the question I get asked all the time. And it's not me doing it, it's the market doing it. The market tells us what numbers are important. I teach you how to figure it out in the Lazy E-mini Trader course. Would have loved to do it in the morning session, but nevertheless, they keep doing the same thing over and over and over again. When they do it is Mrs. Market's choice. How they do it is not. They do the same shit over and over. Who made money in that trade today? Post it under the video. Let folks know this is no joke. Spider morning trade in the afternoon, Nvidia, Tesla, we're doing just fine day in, day out. Let me ask you this question. If you're not in the live room, if you're not an Inside the Number member, what are you doing during the trading day for ideas, for trades, for numbers? Are you successful? If not, what are you looking at and what are you waiting for? Food for thought. What's going on over in Camp IWM? Little bit of relative strength today, up about 80 cents, 0.4%. Above all the moving averages, trend is your friend. There's nothing bearish here. It's just either bullish or they're going to pull a rug out. Here's the weekly chart. The IWM is simply grinding higher. Next target I have is 216 even. Doesn't mean they have to get there, but if they get above yesterday's high, or last week's high, the door will open and it will draw price in. It's a magnetic place. Divergence a little bit from the transports. Folks down at the transportation department, they were down about 62 points today. The same 0.4%, the IWM was up. So my favorite market leading indicator was up. My favorite canary in the coal mine was down. They cancel each other out. Gives us no new information. What do we have tomorrow? We have alphabet soup. We have PPI. They move the tape in CPI up. Will they move the tape in PPI down? Or will they move it up yet again? We'll find out at the 8:30 a.m. data release. And that's Dater, D-A-T-E-R, Dater. Here's where things start to get a little bit interesting. Q's struggled today. Down about $3.50, 7/8%. No volume to accompany it. They're above all the moving averages. That's bullish on its face. But wait, there's more. Now on its face, just trending / trading / treading water above all the moving averages, namely right above the 20-period moving average. That's not bearish. They're just riding the 20-period moving average that is sloping upward. They're just grinding up. There's nothing wrong with that. We just have to beware of the rug pull. Is something else telling us to beware of a rug pull type of situation? Well, there may be something out there. We'll say lurking. Talked about this last night, talked about it today in the live trading room. We have a bona fide reversal candle from last Friday. Yesterday, it was positive. Looked like no problem. They finished on the highs. Everything's back to normal. But this was just a minor retrace of that big time down reversal candle. Today, Smashmouth is back down $4.50 or 2%. This is, and let me repeat it one more time, this is a big time reversal candle that can't be taken granted. It can't be taken with a grain of salt. You have to take this at face value. Even on the weekly chart, you have a pretty decent tail. You have a pseudo doji, a doji candle. You have a small retrace so far this week. This is an important high until proven otherwise on volume. Weekly volume, daily reversal, weekly tail. You have to take this seriously. The semi space is, generally speaking, over the course of many, many years, not every single time, the large majority of the time, a wonderful tell, if you will, similar to the transports and the Canary and the coal mine situation with the overall market that I look at all the time. Well, when you narrow things down a little bit, the semiconductor space, the Philadelphia semiconductor space, is a wonderful proxy, if you will, or indicator, not a proxy, an indicator of trouble or health in the tech space as a whole. If the semis are selling off, it's kind of like the banking thing. Nothing wrong with the banks, nothing wrong with the market. Something's wrong with the semis, something's wrong with tech, and you see that in the Qs today, and that could certainly populate through the rest of the market. Let's face the fact, the semis are overcooked. Doesn't mean they can't go up more, but just on their face, they're overcooked. And by the way, speaking of the financials, anything wrong with the financials? Well, get above 40.80, they go to the next spot. What's the next spot? 41.40. They're on their way. So there's nothing structurally wrong with the overall market. We have a narrow segment in the semi space that were overcooked that could tip over the tech space, and if the tech space tips over, that could certainly populate through the rest of the markets. However, right now with the financials, there's nothing wrong with the S&P. We'll take it at face value. Let's check in at our Fab 7 tonight, see what's going on over there. We're looking for clues. Any clue in Amazon? It's in an uptrend. There's nothing wrong with Amazon. You can see here on the weekly chart, they're just hovering around that target that we had. They finally reached the target, finding it difficult to stay above or even get above for more than a day above that target. That was 176.75. The target was 85. Today's close, 176.75. We'll give that a funny how that works. What about Apple? So Apple's not the same. You could see it almost looks like we just flipped the chart over. Amazon's bullish. Apple is bearish. Apple's in a downtrend below all the moving averages. Trend is your friend until proven otherwise. She's in a downtrend. What about the weekly chart? Below the 50, below the 20 period moving average, hovering over the 100 period moving average. Monthly chart into the 20-month moving average. Give up the 20-month moving average at the end of the month. That's going to be a warning signal, a flare up in the air for Appleunians. Apple's a market leader. Apple has not been leading this market in the upward direction. It was taken over by the semi space, money rotating out of Apple into elsewhere, semis and other. On its face, there is an individual issue in Apple not participating in the bull market. Of note, puzzle piece on the table. Let's move on. How about Mickeysoft? Mickeysoft is bullish above all the moving averages. Trend is your friend. Above all the moving averages, weekly, monthly, daily. There's nothing wrong with Mickeysoft. Mickeysoft is still a monster. Stocks pull back, they go back up. They pull back, they go back up. Microsoft has been eating time off the clock in a bullish formation. Google bouncing, but it wasn't participating similar to Apple in the overall broader bull market. Weekly chart, recapture the 20-week moving average, which she is trying to do. That's okay. Staying above all the moving averages. Trend is your friend, and there will be nothing wrong with this tape. They'll recapture that 50-period moving average on the daily, puts the weekly in stable footing. They have to get above this high here. This is a really important number, 142.44. If they can't get above 142.44 on daily close, they will come back down. It's a big-time breakdown candle high. She's running a test of it now. Got almost to the top so far. Little more to go, maybe another pop or so tomorrow. Remember, we have Alphabet Soup tomorrow, PPI. Market could go either way. They could issue another goose operation, or they could tug the rug. There's no conviction in this upswing in Google. Let me show you why I say that. Each and every day the market goes up from this recent bottom in, let's say, the 5th, 6th of March. You have declining volume. That's not, and I repeat not, underline not, institutional participation. That doesn't mean price can't rise, but you don't have institutional conviction, meaning a new bull market in Google with institutional sponsorship. That's one of the ways you read volume. NVIDIA, we know about NVIDIA. It's just a monster. It's in an uptrend. Here's a pullback. Is this candle going to take hold? Is the SMH daily candle going to take hold? This is from last Friday. We'll see. Right now, NVIDIA's on a retrace above the high, and she just continues higher over $1,000. If this is going to hold, this could be a line in the sand. Meta, above all the moving averages, trend is your friend, tested the 20-period moving average, bounced off of it, hovering above. Nothing wrong with NVIDIA until there is. Meta, sorry, not NVIDIA, Meta. That's Meta, M-E-T-A, but I say Meta, M-E-T-R. Why is that? I don't know. It's just a thing. Tesla, we already looked at that. I have the next number down. Live Room will have that number. We'll participate if we can in the live room on Thursday. There's also a number in the swing trade system for Tesla. It's getting closer. There will be an alert issued for the lazy swing trader people if Tesla hits its number. It's not that far. Been waiting a long time. Been waiting for like $40. Patience pays in this business. Ask members of the live room if patience pays. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.